Welcome to our channel, where today we discuss the topic of the 60-day capital gains tax property return. Are you a UK resident and have you sold a residential property on or after the 6th of April 2020? Or are you thinking of selling a residential property in the future? Do you know how this should be reported to HM Revenue and Customs? Stay with me to learn the guidelines on how to report this. If you've ever sold a property in the UK before, then you should know that your property gain or loss would have been entered onto a self-assessment tax return. This all changed on 6th of April 2020, and the method of reporting this gain changed significantly. Between 6th of April 2020 and 26th of October 2021, you would have had 30 days from date of completion to complete a capital gains tax return. From 27th of October 2021, the guidance changed to reporting within 60 days of completion date. So what does this mean for you? Firstly, I would recommend you to work out your gain as to whether you need to report this on a return or not. If you're unsure how to work out your gain, then assign this task to your tax advisor. Here at Cunningham's, we regularly calculate the gains or losses for clients who have sold property. If your gain does not exceed the tax-free allowance, you will not need to report this on a CGT property return. So in simple terms, the gain is usually the difference between the amount you pay for the property and the amount you disposed of the property. There are certain fees that can be deducted to reduce your gain. For example, estate agents and solicitors' fees, or even some costs of improvements. But be careful. The area for costs of improvements can be a bit tricky, as you don't want to claim for costs that shouldn't be included, such as decorating costs or even things like a repair to guttering. But you can include if you've made, for example, an extension to the property like a conservatory or front porch. Don't forget also, you may have your annual exemption to use to offset against your gain. At the time of recording this video, it is £6,000, which you can only claim once a tax year against all of your capital disposals. In some situations, you may not have the purchase cost of the property, but instead the market value should be used. If you inherited the property, you will need the market value at the date of inheritance. Certain sales will also use the market value at the date of sale, including gift of the property and selling a property for less than it's worth in order to help the buyer out. You will require specialist tax advice if these following circumstances arises, like where your property was compulsory purchased, you sell or lease a part of your land, or selling property from the estate of someone who has died, or you live abroad. There are certain reliefs that could apply when selling the property too. I won't go into too much detail on these in this video, as this can be very specific to individuals. But a more common relief is if your property was once your own residence, there is principal private residence relief. There are also other reliefs, if it is a business asset or it's been occupied by a dependent. Now, if you jointly owned a property, you have to report your own individual gain or loss. However, if you sell property to your spouse, civil partner, or to charity, there are special rules for this as well. Once you know what your gain is, then this will be the point that you know whether you need to report and pay capital gains tax within 60 days of completion. Now, if you've made a loss, the rules are different and you will not need to complete a CGT return. However, if you made another gain in the year, then this loss can be offset against your gain. If you've never made a gain, the loss can just be reported on your self-assessment tax return. You have up to 4 years after the end of the tax year that you dispose of the asset in order to claim the loss. There are certain rules regarding losses, but I will not go too much into detail in this video. But just be mindful of the different loss rules. For example, a loss cannot arise from a disposal to your spouse or civil partner. Now, before we discuss this further, I hope you're enjoying this video so far and it's been informative of when and if you decide to sell a property. If you'd like further advice regarding this, please get in contact by commenting on the video or direct to us at Cunningham's. I'll put the details below for you. We'd also really appreciate if you could click the like button below, and if you want to see more of our videos, please do hit the subscribe button and the bell icon to be notified whenever we release a new video. It really helps us to know that you like what we're doing and tell YouTube that other people could also benefit from this video. Now, how do you report your gains? There are two ways to report your gains, either online or via a paper form. The paper form is only used if you cannot report online. To report online, you will need to set up a CGT on UK Property account via your Government Gateway user ID and password. If you do not have this, you can create a user ID the first time you sign in. Some of you may feel confident enough to complete all the return yourself, or some may want your accountant to do this on your behalf. Here at Cunningham's, we do this regularly and can submit and access your CGT return via our HMRC agent account. In order to complete the return, you'll need the address and postcode of the property, date you got the property, date you exchanged contracts when you were selling or disposing of the property, date you stopped being the property's owner, the completion date, value of the property when you got it, value of the property when you sold or disposed of it, costs of buying, selling or making improvements to the property, details of any tax reliefs, allowances or exemptions you're entitled to claim, and the property type if you're not a resident of the UK. It's important to note that if you're not a UK resident, you will need to report all sales and disposals of UK property or land by the deadline. This is still the case even if you have no tax to pay. Also, always keep a digital or printed copy of your return. You can view and change your own previous returns through your online account if this is required, as remember some of the details you enter onto the return are estimated, like your total income for the year. You will still need to complete a self-assessment tax return for the year that disposal took place in if a return was issued to you. However, if you've already sent in your tax return for the tax year the gain occurred, you can't amend your property account return. If you sell another property in the future, you already have your online account set up, so any future gains can be submitted through the same account. After your gain is reported to HMRC, depending on how your property return was submitted, they will send you a letter or email detailing a payment reference in order for you to settle the capital gains tax. This payment reference is a number starting with an X. This payment can be made by various different means. There you have it, an overview of the 60-day capital gains tax reporting. I do hope you have learnt some very useful guidance on this, but if you have any further questions or comments, please feel free to list them below. Also remember, this is just an overview, and personal circumstances will require tailored, specific advice. Thanks for watching. I hope this video has been useful to you, and remember, sometimes just one thing is all it takes. See you soon.